Hello there, this is Prof. Aram, and in this video I'm going to address three of the main questions that are usually asked and answered by CFOs all around the world, mainly capital budgeting decisions, financing decisions, and working capital management decisions, right? So let's get to it. The first one is, what long-term investments should the firm undertake? We usually call this a capital budgeting decision. So the two things about this is the size of the investment and the duration of the investment. These investments require a significant amount of capital, and usually they have long-term impact on the valuation of the firm. The second question is, how should the firm raise money to fund these investments? We call this capital structure or a financing decision. So the goal here is to choose the right mix of debt and equity that minimizes your cost of capital. And finally, the third question is, how can the firm best manage its cash flows as they arise in the day-to-day operations? We call this a working capital management decisions. In other words, you're learning how to deal with customers and suppliers and banks and etc. The goal is to be able to collect the cash from your customers as fast as possible, pay them to your suppliers as late as possible without pissing them off, and meet the contractual obligations that you have that are due in short term, usually within 1 year. So we can also look at these questions in the balance sheet of the firm. When you look at the fixed assets of the firm, this is usually the first question. These are related to capital budgeting. The fixed assets on the left-hand side of the balance sheet are the answers to the capital budgeting decisions. These are long-term investments that the firm have taken over time, and each company has a bunch of fixed assets such as commercial real estate, fleet of trucks or airplanes, or they have factories and etc. Plus they have some intangible assets such as patents, trademarks, and so on and so forth, which hopefully they generate cash flows and value for the owners of business. So for example, if your company is investing in R&D, right? R&D projects are usually very long-term and very risky, and they require a lot of capital. So if that R&D project ends up to being successful and ends up materializing in a patent, that would be listed under the intangible assets in the fixed assets part of the balance sheet. After you decide that a project is worthy of pursuing and you accept that you need to invest in that project, the goal next is to raise capital, to find out how you want to pay for that project. So this part of the balance sheet, long-term liabilities and shareholders' equity, answers the second question. So after again you decide to purchase that fixed asset, you need to decide how to pay for it. You may decide to borrow money from the bank or issue long-term bonds, which would be long-term liabilities, or you may decide to issue new equity to investors, or use your own capital, or you may decide to use internal financing, your retained earnings that you have accumulated over time. So again, the goal for the financial manager is to choose the right mix of debt and equity, these two, that maximizes the value of the firm and lower the cost of raising capital. And finally, these two parts, the current assets and current liabilities, deal with the net working capital, deal with the day-to-day operations of the firm. The CFO of the firm should decide how much cash and inventory is needed, because inventory is risky, right? And cash doesn't earn and a return. So you want to have a good balance of cash and short-term investments and inventory. And then what are your short-term liabilities? These are the liabilities that need to be paid within a year. And this is where, I mean, if you don't do a good job in the current assets and current liabilities and day-to-day operations of the firm, and you can't meet your short-term liabilities, this is where trouble happens for most firms. If you're not able to pay your interest on a loan, it doesn't matter how many investments that you had over the past and how many of them were successful. If you can't meet your contractual obligations here, then you have to file for bankruptcy. So even though these are very important decisions that you have to make in terms of capital budgeting and long-term long-term financing that you have, but these are not the type of decisions that you deal with them every day. You're not building huge factories every day, but you need to deal with your customers, you need to deal with your suppliers, and you need to deal with banks on an everyday basis, so you make sure that the company stays solvent. I hope you found this video useful, and thanks for watching.